The popularity of Bitcoin has spawned a slew of imitations and spin-offs. One group has worked hard at recreating and expanding upon Bitcoin's financial innovation, while the other group has merely used the cryptocurrency to entice investors through a form of affinity fraud. However, there are a number of ways in which these altcoins, or alternative currencies, could potentially challenge Bitcoin. However, Bitcoin has a few crucial features that altcoins can't just imitate. So, what's better in terms of short-term and long-term investment? Hey, and welcome back to Crypto Cash Channel. In today's video, we will see the differences between altcoins and Bitcoin and also analyze which investment is better. But, first, before we go on, a sub to the channel would be very appreciated. Comment, share the video, and don't forget to leave a thumbs up for the video. So, let's get into it. Let's start off with the most important question. What are altcoins? It's basically any other cryptocurrency that is not Bitcoin. These days, altcoins are becoming increasingly popular. However, because Bitcoin was the first cryptocurrency and has dominated the market, it serves as a benchmark for other cryptocurrencies. In the words of Colin Pape, the founder of Presearch, a search engine powered by blockchain technology, states that Bitcoin has provided a blueprint for how cryptocurrency projects should work. But, although Bitcoin's technology is used by altcoins, their functions, features, and operation may differ. Bitcoin's infrastructure lacked several of the features that alternative coin developers envisioned, so they set out to create their own versions of the cryptocurrency. As an example, Ethereum can be used to build new tokens on the network while also allowing users to send cryptocurrency amongst themselves via the technology. Cardano, like Ethereum, enables peer-to-peer transactions and application development on the network. Cardano's platform, on the other hand, relies heavily on research when it comes to establishing its blockchain network. Litecoin has its own set of advantages. There is a higher supply of Litecoin than Bitcoin, and Litecoin transactions are faster. Litecoin's goal is to serve as a silver substitute, much like Bitcoin's role as a gold substitute. A seemingly unlimited number of cryptocurrencies does not necessarily compete with the value of Bitcoin. Altcoins are projects that build on open-source blockchain technology, giving alternate use cases for the existing financial system and large tech corporations. For example, decentralized finance or NFTs. But, in what ways does Bitcoin differ from other cryptocurrencies? First, there is the network effect and recognizability. Bitcoin has enjoyed a major first-mover advantage due to its status as the first successful cryptocurrency. With 12 years of existence, it has developed into a vast, diversified community that draws the brightest developers. It is impossible to compare Bitcoin's network size, market valuation, or transaction volume with any other cryptocurrency because of the sheer number of nodes connected throughout the world. Despite the various altcoins with identical names and logos, Bitcoin's industry domination generates a distinctive brand for the currency. Second, there is the Lindy effects and reliability. Now, unlike any other technology or firm, Bitcoin has had an unprecedented amount of uptime. Coins have been available and functioning on the Bitcoin network since 2013. The level of trustworthiness attained by firms like Google, Microsoft, and Facebook is unmatched in the business world today. Bitcoin has weathered attacks from the outside world, as well as internal disagreements over the protocol's future path. The price volatility of Bitcoin has decreased over time, despite the fact that it has seen enormous price increases and dips. Only Bitcoin has more than a decade of history behind it. Many investors, developers, and previous detractors see Bitcoin's extended survival as a measure of its strength. The third difference is anti-fragility. The resilience of Bitcoin has increased significantly during the past 12 years. Bitcoin was designed from the start with only a single point of failure, its founder. With the passage of time, Satoshi Nakamoto, the project's originator, relinquished power to a collective of early developers. Since then, the tendency toward decentralization has persisted. As of now, the Bitcoin network has more than 100,000 nodes and an unknown number of miners. Most altcoins can be shut down by a government or leader's decision, but not Bitcoin. Having faced technical, social, and political challenges has also proven wrong the many negative theories about Bitcoin's long-term viability. At one point, the US government tried to shut down the Silk Road, but Bitcoin stood firm and even grew in popularity in the interim. Critics anticipated that Bitcoin would not be able to withstand a 51% attack after the first 3 halvings. Critics also argued that a decrease in security would lead to a price drop, which would lead to a decrease in hash rate, which would lead to a negative spiral in the network's performance. They even interpreted the price dip from $19,000 to $6,000 as a sign of Bitcoin's impending demise. Many others argued that Bitcoin's network effects and solid monetary policy would be destroyed if it were forked or that Bitcoin itself could not scale. As it turns out, none of these concerns have come to fruition, and Bitcoin has become stronger for it. So, do altcoins create inflation for Bitcoin? The answer is no. They can't affect the price of Bitcoin. In fact, Bitcoin determines the price of all the altcoins. This is due to the fact that Bitcoin is a singular asset that is self-dependent. Even if new cryptocurrencies are launched, and their quantity grows, they cannot be passed off as genuine Bitcoin, not even through hard forks of the Bitcoin network. But, can a better altcoin eclipse Bitcoin? Well, the advantages of Bitcoin outweigh those of other cryptocurrencies. Bitcoin has the greatest network, the most credibility in the eyes of retail and institutional investors, and the most secure database in history built on top of it. There should be no doubt about the power of Bitcoin's network effect. For the most part, Bitcoin is a money-related innovation. However, it is not a very breakthrough idea in the field of payment mechanisms. Because money and payment systems have various characteristics, there is a big disparity here. Fast, inexpensive, and universally accepted payment methods are excellent. However, an ideal currency must be a store of value across time and space, and Bitcoin promises to accomplish this better than any other asset, including altcoins. Its capacity to store long-term value is owed to Bitcoin's carefully specified monetary policy. Only 21 million Bitcoins will ever be created. From an economic standpoint, it's hard to think of a better investment or monetary policy. Bitcoin's monetary policy is maintained by the thousands of nodes that make up the Bitcoin network, each of which verifies each transaction. The monetary policy of Bitcoin, in contrast to that of a central bank, cannot be altered by a vote in a committee meeting. Changing Bitcoin's monetary policy will be impossible until all nodes on the network are persuaded to make the change. Simply put, this is not possible. When the value of Bitcoin rises, the value of alternative cryptocurrencies follows suit and vice versa. In contrast, altcoins' price movements are far more volatile than Bitcoin's. In a market where the price of Bitcoin is nearing all-time highs, some investors believe that altcoins have more potential for growth and a good investment. A rising tide lifts all boats. However, consider the dangers connected with altcoins if you're looking to diversify your cryptocurrency portfolio. Because there are over 10,000 cryptocurrencies, the odds of picking one that will last are slim. But, if you choose the appropriate altcoins, especially the smaller ones, you can expect a return on your initial investment that is exponential. In June of 2020, the Solana token that is today valued at $99 cost just 50 cents. Alternative cryptocurrencies have a significant level of risk, so experts will always tell you that it is best to look for ones with good quality and solid fundamentals. Risk-averse investors should look for cryptocurrencies with the potential for widespread utility in the future and analyze the market cap size and the amplitude of price swings. According to Nick Saponaro, the CEO of the San Diego-based Divi project, he states that volatility will always be a concern with a new and speculative asset class like crypto. So, to him, investing in fundamentals will ultimately lead to a more successful long-term approach. Dogecoin and Shiba Inu may rise to astronomical heights due to community-driven waves, but Saponaro warns that these peaks are generally short-lived because there is little to no fundamental basis for the price of the asset. Aside from some of the most popular altcoins, it's difficult to tell which ones will have a long-term worth. For example, Omicron, a cryptocurrency that increased in value 1,000% after news of a breakthrough coronavirus variation came out, swiftly collapsed by roughly the same amount it had gained. So, for short-term investments, altcoins are the best. Bitcoin won't do you any good apart from adding a few cents to your investments. While as for long-term investments, Bitcoin is the best option due to the high volatility of altcoins. And that's it for today's video. Thanks for your time and attention. What do you think of altcoins' potential? And do you think a time will come when altcoins will outdo Bitcoin? Comment below. Let's engage. Also, if you are interested in more videos like this, make sure you like this video and subscribe to our channel. Don't forget to turn on the notification bell for more amazing videos. Goodbye. See you in the next video.